GM, I have begun reaccumulating Bitcoin, buying Bitcoin again. Any of you in the private group will know that I had an order at 86 and 82K, which both filled over the last few days for a 10% and 15% allocation, respectively. So 25% total. Now, this is from selling all of my Bitcoin cycle bags back on August the 11th at 121K. I'm now starting to buy back. So let's dive into it in this video, why I'm actually favoring the bull side more than the bear side for at least the coming days, 2 weeks. So Bitcoin, obviously 50-week EMA was our cycle support. That's been lost. Now we're at the 100-week EMA, which has been providing some support. I've been mentioning a weekly close above this level sets up potential swing longs for bulls. Now, that doesn't mean we're just going to go vertically up. Far from it. But if we dive closer into the Bitcoin chart, what have we seen here? Well, if we go to the daily and we put on volume, we saw a big red day with high volume at the 100-week EMA, which has provided for now a bottom. And that has got the signs of capitulation and forced selling. Because if you go to previous examples, which of course are at the 50-week EMA, you have a day like this where you have big volume selling, gets bought up with a long wick, another day of big volume selling, then gets bought up, and another day here of big volume actual buying. So this was a green candle, but same picture, big wick down, reclaim that 50-week EMA. So question is, for me, whether we are at here, whether we are at here, or whether we are at here. That's where I think we are, and I think there is some rally to come in the coming weeks before a breakdown. Question is just whether we're at this process where we still need to sweep again, and then sweep again, or whether we're already bottom in, no need for a sweep, and we're just going to go. That's what I'm looking at in the coming days to weeks. So if we go back to this chart, let's take those drawings off again for a second. Question for me is whether bottom's in here or whether we need to go for another sweep and another sweep to put in a proper bottom. But overall, I think downside is limited now here due to that high volume capitulation, due to the fact that we've been in a harsh downtrend for some time now and shorts have been super easy. We've been printing, from all of my trade setups. It's been a pretty easy ride following the trend to the downside. And eventually that ends because everyone gets short and tries to jump on board right when it's going to change and it's going to turn. But as I said again, that turning process doesn't have to just be some V reversal where we go straight up. So let's look at Bitcoin. Now for October and November, we are shaping up for a red month. So by no means am I saying bull market is back on. No, far from it. If you go to the 12-month candle on Bitcoin, it is red, and what should be a bull market year, this candle shouldn't be red, it should be green. Anyone who bought hoping for this year to be bullish and that to play out as it usually does is underwater. So cycle has for sure been broken. That's been clear really since October the 10th. And for me, when we saw these distribution sweeps, that's why I sold everything. But because we've had a red October, we've had a red November, potentially a lot of people are going to be expecting a red December to follow up. But could we see some rallies now coming into end of year? I think that's very possible. How high it goes, who knows? But you're just not at a place where I think shorts are favorable because you've been going down for so long and it's been such a harsh downtrend. You've had these daily bands respected every time. Hits them, respects, every time hits them. But now you're hitting that 100-week EMA. You've got a high volume selling day. You've got all the hallmarks for what could be the start of some sort of bottom before a rally, at least to squeeze some positioning. And the data further shows this. So if we look at Bitcoin here, futures data, What we are seeing is since October the 10th, so that big liquidation day, obviously open interest nuked, a bunch of longs got closed out, forced out of the market. Shorts, of course, they would have took profits, so they closed out. That leads to this falling. Since then, it's been building. Futures positioning has building, 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 back to the levels that it was at October the 10th. But price is much lower, right? So it's very clear that a lot of this open interest is hedges. It is shorts, people covering their spot long positions, trying to protect themselves for the downside, as opposed to people just long in the dip, and positions rebuilding. So it's a market that's gone down and shorts have definitely built up. We can say that's for sure. And then those shorts, they've been right. They've been correct. Market's going down. They're in profit. That is harmony. That's why we've had a downtrend, and then downtrend's been very profitable to trade on the short side. But since that day, where we had that wick down on Friday, we're actually now seeing open interest fall, something we haven't seen before. It's been rising, rising, rising as price goes down, down, down. But now price is going up, and since that day, we're seeing open interest fall. So this is going to be catalyzed by shorts having to close out their positions. Once too many shorts get in, and eventually towards the end, you see the big build up of anyone shorting at 87, 86, 85, high time frame shorts. They're going to have their conviction tested. It's like the people who bought Bitcoin above 100K thinking we're going to be bullish, and maybe we would have been, who knows? Alternate universe, we didn't have this day, maybe Bitcoin would make new cycle highs. That's why we all have an invalidation. And their invalidation would have been losing this low, where they then start having to hedge and short and cover their position. And problem with that is, if you're hedging at 97 or hedging at 88, especially in the 80s, you're going to have your conviction tested. You're going to see a rally at some point, at least in my opinion, to go and make those people question whether they should have sold, question whether they should have hedged. It's just what markets do. So when you look at CVD, if we go a little bit lower time frame here, so this is the perp CVD, cumulative volume delta. So the market orders, this is a spot CVD. We're actually seeing since Friday, so since this big capitulation, perp CVD is down. So on the market side, shorts are trying to push price lower, but price is not respecting it. Price is going up. Whereas spot, since Friday, spot CVD has been rising. So at the market, spot are buying, and price is respecting that. So this creates a big divergence where you've got futures positioning shorting, and they're wrong. Very key. I keep mentioning that. It's very important whether they're right or wrong. And you've got spot who are bidding, and they are right. Price is respecting that. So this has the makings for what can be a short squeeze. Now, that's why my bias is to look for longs, but again, that doesn't mean you can't go down for a proper retest of the lows to form a proper bottom. I don't think the high risk to reward is over here. We can even sweep the lows, as I showed you in those previous examples, and that can form the proper bottom, and that can give us the proper launch pad to actually hit the 90s, maybe even the 100s in a proper short squeeze to test the conviction of everyone hedging during this downtrend since they lost that October the 10th liquidation day low over here. So that's what I'm looking at. That's why my bias is to look for longs and not for high time frame shorts, because shorts, they're not being proved right, at least on low time frames here. And you're seeing the early signs of that bottoming formation, that capitulation, the high volume selling, open interest now declining, so shorts having to get out. Anyone with shorts should be exiting, should be getting out the market. You don't hold for Hail Marys if the market is going against you now, because short squeezes can be violent and they can go very high, even with the market not flipping bullish. So you guys will know I've mentioned this quite a lot now. So Bitcoin could rally all the way back up to any of these resistance levels. It could go back to 110 and still be bearish. But in that scenario, longs are still going to be best. It could chop around sideways for here. It can just grind higher before going down. But again, longs are the best scenario, even if it goes up to something like 100. Because, well, yes, we could just see some sort of slow capitulation grind lower, and maybe we do just continue breaking down. It doesn't offer the best risk to reward here when you've got all of these confluences, when we're at a previous demand zone, a place where price should bounce, and you're seeing all of those dynamics I just suggested there. You're seeing these ETF flows with a huge outflow day on Thursday, which we know typically marks the local bottoms. You've got all the signs for at least some sort of rally. And if you want to sell your Bitcoin and you are smart money, you don't sell it here after you've gone vertically down. You wait for some sort of bounce. That's inherently why the markets can bounce and why they do go into those lower highs. The only time they do just go vertically down is when you've got a catalyst like China banning crypto over here, or whether you've got 2022, bunch of stuff collapsing. You've got Fed saying they're going to do QT and money printing's over. Bunch of catalysts to just go straight down. But right now we don't have that. I mean, you have the Fed, as I've been saying, stopping QT. Interest rate cuts, although questionable whether we're going to get a December one, it looks like they're on the path to keep cutting. You don't have that catalyst to just go vertically down, which therefore price goes lower to find an area of demand so that it can bounce. And then by that nature, it will bounce to an area of supply where it will then potentially reject. It's as simple as that. So trades wise, what I'm going to be looking at on Bitcoin, how I can actually systemize it and technically and objectively form a long to express this thesis, express my bias, would be one of these paths. So green path or blue path. I think lose the 100-week EMA, reclaim the 100-week EMA, I'd be looking for long. So much like how we traded this 50-week EMA over here, you came into it, you lost it, and then on the reclaim, if you guys remember, we got long, and that played out for a bounce before eventually losing it. So it's the same idea. Lose it, reclaim it, I'd look for longs, and that would then be playing for this failure to return reversal pattern where you actually set the higher low, because that's very possible. Or alternatively, blue path, obviously the easier to trade path because it gives you a clear invalidation at the low over here. If we sweep and reclaim, then I'd be looking for longs, playing it for a scenario like this, where we see price set a low, it then sweeps the low, reclaims, and that's what gives you your bottoming formation. So that's the idea behind that path, and that would be getting long once we reclaim that liquidity level. So that would be on something like the 4-hour, potentially even the daily, if we do have to extend this out, and this does take more time. But that's the paths I'll trade. It's not necessarily what's going to happen. We could just blast straight higher and just get this short squeeze. But as you guys will know from yesterday's video, that's then just more likely to fail. And I don't have to trade the long side. I can potentially scalp it and day trade it, and I'll keep you guys updated on that. But it'd be more inclined to then short and sell the retest of this 50-week EMA over here if we do go vertically up, because then it's more likely to be just fueled by a short squeeze and no underlying demand. But green path and blue path, the reason this has more underlying demand is because it's cause and effect. You're going sideways for a lengthy period, you're attempting to go lower, you're failing to go lower, and that is a sign of reaccumulation. And that can be a nice 9-day, who knows, if it's on the daily, maybe it can be a 15-day sideways period, maybe it's going to be months long. You don't know, but this is how I'd trade it, and this is why I'd be biased for longs in this scenario for multi-day, potentially multi-week holds, because you're failing to go lower, you're showing signs of reaccumulation, and these triggers then get you on board for some rally that can be more sustainable than just a vertical short squeeze from here. And of course, maybe we are just going to break down, maybe there's something coming up ahead, but again, that's why I've sold all my cycle bags on August the 11th. I'm in luxury of being 75% cash now, having bought some at 82 and 86. So if we do just blast lower, I've got 75% cash to keep buying long-term Bitcoin. So great. Maybe we don't get those scenarios, but that's why I've been prepared for this. Charts aren't just about today, guys. All the work we're doing months ago helps you out in the coming weeks and months and years later. So go lower and these paths don't play out, that's also fine. We will just do some more long-term accumulation. But I think there is a real shot at bottoming out here due to all of those confluences I told you guys today. So that's what I'm looking at on Bitcoin. Of course, we got Deribit options. ATM UTC Friday. That's going to be very interesting. 80k, 85, and 90k are the key levels. So this can really confluence with the setups that I mentioned, where if I see that inorganic pushing of price below one of these levels as we head into Friday 8 a.m., and then we reclaim it, I'll know that inorganic pushing below will have to unwind, and that can also catalyze the move and really start the breakout if we do get that scenario, and that's going to be around those levels. So I'll keep you guys updated on that. Closer we get to Friday 8 a.m., the more relevant this becomes and can add additional confluences to these setups that I mentioned here. So no interest in shorts unless we see a violent squeeze up. That's very obvious because generally here you just want to fade big moves. If you have a big move to the downside, you want to fade it and get long if we reclaim. Big move to the upside, you want to fade it and get short. And over here, while we're in this box, there's no shorts. It's looking for longs only because there's no edge here, I think. Shorting small moves after most of the downtrend has already commenced. It's just not offering the best risk to reward. So that's everything in terms of Bitcoin. Obviously, looking at the wider market, seeing stocks try to reclaim the September FOMC level. You're seeing gold pushing up above some of its liquidity levels, and the dollar remains accepting above 100. So let's see how this all shapes out. If we look at the stock market, it has been losing some key levels. If we go to something like the weekly and we put some simple EMA bands on, well, what are we seeing? Get something like the 50. We've got the 50-day in there. If we go to the 1-day chart, we've been closing below the 50-day EMA, this purple line here, upper purple line, which we haven't previously done since the tariff crash. So that's an early warning sign that stocks are ready for some sort of pullback. If we go to the weekly, take that off for a second. We just look at the weekly 50 EMA and the weekly 12 and 21 EMA bands. We're retesting them, so potentially this can lead to new highs and is really your last area of support. But if you start to lose the weekly bands like we did here, that can again set up for a lengthier pullback. So that's the bias on high time frame for stocks. You're seeing some signs of weakness in this trend, but that doesn't mean we just go straight down. As you know, uptrends don't go straight into downtrends. You can then have some distribution period where you go sideways. Smart money generate more exit liquidity. This is all liquidity building so that you can actually fill your positions and then break down later on. And the key levels are September FOMC. Below there, bias is for downside directionally. Above October FOMC, bias is for upside directionally. And in between, simple, expect chop, because markets can chop longer than people can remain solvent. And that's why it does that. That's why it generates the liquidity so people can buy and sell, accumulate and distribute before it picks its direction. And that's going to, of course, have correlations to crypto, affect the crypto market if we do see the breakdown or even the breakout. But I think the longer stocks can chop in here, that then gives Bitcoin and crypto actually the ability to have some rallies, have some short squeezes if we see this hold up. So good to see that yesterday's candle reclaimed September FOMC very convincingly on the NASDAQ. Shows that there is some bid, there is some strength coming in at least, which can hold it here for a little while. And then you can see risk on rallies across the wider markets, I think. So that's what I'm looking at in the markets. If you guys enjoyed this video, drop a subscribe, turn that bell on, drop a like, drop a comment so I know you value the content. You want to join our private group, drop me a message on Telegram. First link in the description. I'll see you guys in the next one. GM.